and it has to justify that it is actually doing it for the purpose of profit, including profession, calling, trading, manufacturing, undertaking of any kind, an adventure, or concerning the nature of trade. So business income includes income from any activity that you do for profit. Okay. Now there are some kind of businesses which are called as recreation businesses or businesses for adventure. But if you are doing it for the purpose of earning profit, yes, that is considered to be a business for earning profit, and that's considered to be under the concept of business. But if you are doing it for the purpose of adventure or recreation, or just enjoying your hobby or kind of and helping other people, then that's not. The main intention has to be to do the to generate the profit. Okay, so in that case, that's considered to be a business. Includes various kind of businesses, as we already mentioned about it before. But even if you see in the self-employment income under in page 3, you will get all the clarity that any income that is business income, that is trade or manufacturing, professional income, commission income, or farming income or fishing income, so they are primarily the incomes what you get it when you do the businesses. So these are different kind of businesses you can expect that you can have it. Taxation year. So corporation can use fiscal period. Do you remember that? If you remember, in the second chapter, we were talking about the fiscal period. What is fiscal period, guys? Anybody remember what is fiscal period?
Is that when you started the
When you started your business.
Oh wow, Eleanor is there.
Yes.
When it's like if you started March, after the next you will buy the next year March also.
Right. So whenever you at the date of it, so when we're talking about corporation, that is an incorporated entity, not partnership and sole proprietorship, but incorporated entity. So at the day when you receive the incorporations, you start a business. So from that date, first year you can decide how long you want to carry on the business. Okay, and then from the when you close the first year's business, that very date, the very next day, you will start the new business year, and then you have to carry it for not more than 53 weeks, right? Or 371 days. So that's your fiscal period. Thank you for adding up, Rex and Eleanor. So that is for the corporation. Even unincorporated business also need to have can also use, like they need to have you just term them as a fiscal period. So you don't have to use, you can use a calendar year, but you generally term that businesses have fiscal period. Businesses use fiscal period as their taxation year. Okay, like individuals, we as an individual, when we file our tax returns, we use calendar year, right? But businesses use fiscal period. Fiscal period can be the calendar year. Fiscal period, or you can have a fiscal period from 1st January to 31st. But fiscal period can be any 12 months, any period which is covering. Not necessary it has to begin from January. Okay. Now, unincorporated business, it is said that generally they use calendar year. Despite you say that you have a fiscal period, they generally use calendar year. And because it's reported in the individual returns, but if you have a fiscal year, it is okay. In that case, you have to fill another form. There is another form which you have to fill in. And if you fill that form to reconcile the amount in the fiscal period and the calendar year. Okay. So in that case, if you see here, business income, fiscal period. Self-employment individual generally have to use 31st December year end. If fiscal period end is not 31st December, you have to see form T1139. That's a form for reconciliation, guys. So in that case, you need to be aware. Generally, businesses are filed in fiscal period, but self-employed individual should make sure that, because this is an unincorporated entity, that is not incorporated entity, so you can use and try to make sure that the fiscal period is from 1st January to 31st December. If the fiscal period is apart from that, then you have to fill the form T1139. That is something where you reconcile the dates. You can have a look at that form later on if you really feel that your business period is not together. Okay. Farmers, fishers, and self-employed commission agents can use cash method or accrual method of reporting income. If you are aware and if you remember, we talked about accrual and cash method. What is the difference between cash and accrual method, guys? Anybody? Anybody who remembers or anybody who can throw some light on this? Accrual method and cash method of reporting. Cash method is as and when you incur the expenses, you report it. As and when you receive the money, you report it in your accounts, right? But accrual method is like when I have made the sale, but I haven't received any money yet. So that's called the accrual method. Suppose I have sold goods on credit. Like I'm just going to give an example. Suppose for cash method, okay, I did explain it, but then I would like to explain it again just so that we understand it. Businesses can receive because they will receive the money and they will pay the money. They will incur the expenses and receive the revenue, right? You sell the goods, okay, and if you receive the money of 5,000 immediately, so that's cash, okay.
Cash, yeah.
That's
Yeah.
right away.
So right away, everything is right away. It's in cash, yeah. Record revenue and expense when they are incurred. Thanks, Kathy. Catherine Taurus. Yeah. In accrual method, what happens is
It's credit.
yes,
They haven't
credit.
paid it.
Accrual method is now I am selling goods, okay, but I have sold the goods of worth $5,000, but I haven't received the money from the
No.
customer. But at the same time, I have sold the goods means whenever the transaction, I have occurred the transaction or when it is accrued, that means I'm going to record that. So 5,000, it doesn't matter whether I've received it or not, but 5,000 I have sold it the goods, so I am going to record that 5,000. Okay. I have bought some goods on credit. I have bought some goods on credit and I'm supposed to make the payment, but I have not made the payment. But I have anyways bought it. So I'm going to incur, I've incurred the expenses anyways, right? I'm going to pay in future. So that's also called accrual method. So that also you record it. So make sure accrual basis is something which you don't make the payment immediately. You might make the payment in future. But at the same time in cash method, you make the payment right away. Yeah. I'm sure most of the people who have suppliers like big on cash, not everybody makes on cash.
When I was in the Philippines, I was in sales. They have terms like 45 days, 90 days.
The receivable terms like there are different, every company will have a different terms of condition, and every company will have a different terms with different customers again. Like suppose if I have 10 customers, big customers whom I'm selling the goods, because I'm not a retail one, I am a supplier. Okay, so if I have 10 customers, in that case, what will happen is like I will have a different terms and condition with all 10 customers because everybody's credit condition is different, right?
Yes.
Yeah, so in that case, it's very difficult to, it's very easy. Yeah, it's deferred payment. It's a payment which you defer it in future, but you use accrual. Yeah. So farmers, fishers, and self-employed commission agents can use the cash method of accrual to report it. All other self-employment must report using accrual method. So if you are a self-employed person, if you are having, even if like, all other method have to report the income or have to report their income statement in the accrual method, not in the cash method. You cannot use because you don't receive the cash all the time. You will have some level of accrual thing as well. So in that case, you report it in the accrual method of accounting. You use the accrual method of accounting. As a self-employed individual, you may have to pay installment payment. Even if you remember this, we discussed in chapter 2 that there is an installment payment by the people who earn self-employment or who earn some kind of investment income, who does not have kind of T4 or who does not have CPP or any contribution or any income tax deductions, but they're meant to report their amount of income. They report their income, and if they get to know, or if they assess it and they get to know that if it is $3,000 or more than $3,000, they are meant to pay the amount of income tax in quarterly. There are 4 quarters which you are meant to pay, like 15th of every quarter. Okay, so January, February, March, you have to pay on 15th of every quarter. So in that case, self-employed people are meant to make the payment in quarter if your payment is more than $3,000. So that was just some of the business administration or procedure reporting to that. if you remember, we discussed about why are we trying to differentiate, because we don't get confused that because sometimes it's very difficult to identify. Now, I have seen people who are working. Uh, I have seen people who are working as an employee, but they are not employee. They are under contract. They don't have any CPP, EI, income tax deduction. They just work as a contractor in the same place where I work. I have seen people working there. So in that case, one need to identify whether your earning is because when you are filing the tax, when you're reporting the income, you need to identify that whether, of course, it's very easy to identify at times because you don't get any deductions, right? You don't get any income tax deductions. You don't get any T4. You just get directly the earning what you earn in the form of income tax, income and expense statement, or you get just a statement of income. You don't get a kind of T4 what everybody receives it. But again, it's very important that one identifies that what is the difference between business and employment. Do not get confused when you're talking about the business and employment. Now, there are certain points which CRA has given in order to differentiate between business and employment. If you remember, we talked about chapter 3 or chapter 4. I remember we were talking about what are the difference between, I think it's chapter 3, where we talked about difference between employment and you need to consider certain point, like what is the intent of the job, what are the tools required, what is it subcontracting, what are the financial risk, do you earn profit or do you earn salaries. So in that way you can differentiate between employment. There is something called as difference between business versus property too. Oh, when you forget to declare, now Vani, now what happens when you did not declare or forget to declare some income? See, now income is all when you have a proper statement, when you record everything, that's fine. But if you forget to record the income, and if CRA does not catch hold, and when they conduct the audit of they find it up, you might have a problem. You have to pay extra money. Your refund will get reduced. But if you're not caught somehow, if you forget it and that money is not find it out anywhere, then that's perfect, then that's okay. But make sure to record, because you will have in that case also you will have some bank statements. You will have every when the money you are trying to give it, it's not something which you speak verbally, but when you try to, like, suppose you are filing your income tax, okay, what money you are going to quote is CRA also will have that receipt of it, because no, CRA will not have the receipt of the for example, suppose you're working in as a skip the dishes, or suppose you're working in, because you are not working means as a contractor, right? Or suppose you yourself are earning, so you will have some income statement, you calculate it from your accountant, I'm sure, and then you figure it, you put that figure in your income, and in that case you are meant to put that amount because you will have all the transactions. But if you forget it and if you're not being caught, then that's all good. And I think because CRA takes at least 3 to 4 years. Sometimes they conduct the audit in 3 to 4 years. I had one of the student whose audit was conducted in like after 4 years, and she had to pay like around $3,000 to $4,000. Because of CRA had found that there was an audit and the claim was not right. So in that case, even if you forget to declare the income, yeah. Now, I like to tell you in that case, Vani, that if the person is earning a self-employment and if the person's earning is $3,000 or more, that person has to report it. That is his responsibility or her responsibility. Now, you have business income number as well, right? Business number too. So you will be chased some or the other way. Now, if you start paying the income tax, CRA will calculate your income on a regular basis in installment. Yeah, so you declare it in the next year. No, you can declare it in the next year if you forget it. But if you really, really don't want to declare it and if you're caught, then that's a problem. Yeah. So it's very important that it's that you being more on an ethical part and declare it. But if you forget it by unknowingly and if you want to tell later on to CRA, yeah, you can always be nice and generous. And I'm sure they're very helpful. They are quite a humanity basis. They don't create any kind of issues for anyone, guys. So yeah, I hope that helps. Anybody else who want to add up, I'm happy to listen to that as well. If anybody has that experience of forgetting and then paid it later on or something like that, just forgot it. Just forget it. Eleanor, that's very bad because last time even when we calculated the income tax, you wanted to declare the income less. You wanted to declare the income more, but no, you don't want to declare the income more, but you want to declare the expenses more. I remember when we were talking.
Yeah, it's better.
So you want to always forget it.
Pretending you forget.
But guys, when you make it a habit, or if you caught in that case making a habit, then it's going to be a difficult situation for you. You'll be penalized. Okay?
Yeah, I'm not doing that. I give all everything to my account.
I know. You're just funny,
Yeah.
because everybody's sleeping, so you want to keep everybody awake.
Yeah.
Yeah.
Even myself, I wanna be awake.
Hey, I didn't see a picture today. Did you stay in Mexico? Or did you come back from Mexico?
Just came back.
Okay, good job. Did you had a nice time?
Yeah.
Okay, I'm happy.
Over there.
Yeah. Anyways, that's hot. You are hot. Oh God, I can't imagine how things must be there. Anyways, let's focus on it. Everybody's going to shout at me otherwise.
Okay.
Okay, so there is a difference between now when you're going to report the income, you have to differentiate between business versus property because there are certain items which are considered as income from property, and there are certain items that's the same items is considered as income from business as well, like rental property. Okay, so income from rent is considered as a property income, but income from rent can also be considered as a business. So how do you differentiate between business and property? So it's very important that you identify what is the difference between business and property. There are certain aspects which are taken care into it, business and property, and it's being said that business and property is based on the passive and active rule. For example, whether income is earned from income earned is passive or active. Like say for example, um, would include example would include like dividend of shares, interest on bank savings, similar investments such as bond, royalties, and rental income. These are all the passive income. I mean, you don't do much of activity towards it. You just invested, you start continue getting the income. But where you are active, where you are doing the business in more active terms, like providing extra services, you are trading regularly, then there is something called as income from business. But if you are just investing in bonds and just forget it and just keep earning the interest, or invest in shares and just keep earning the dividend, that's something called as income from property, because you're not much active. You don't require any activity. You're more passive. But the place where you are doing so much activity, in that case, it's considered to be a business income. Now, it is personal, case to case, personal responsibility to identify. You will get an idea whether it's an income from property or income from business, because there are some differences if there is income from property and income from business, and sometimes this active and passive is also not very clear, and there is a thin line of difference between that. Now, if you are a corporation who are getting small business deductions, okay, so you are, and if you're running a business, then you get a small business deductions. Well, if you are having income from property, they do not get small business deductions. Property income is not used except the rental income. Okay, property income is not used to calculate your RRSP limit. However, self-employment business income is included in calculation of your RRSP contribution limit. So there are some differences between them. So it's very important. Property income is not included in the line where we are going to record the self-employment income. Property income will be income from investment, rental income, or income from dividend. So they are all the property income. So it's very important to differentiate. Property income derived from rental property is subject to separate rules in relation to capital allowances. Now, what happened is, like, if you are having a property income, suppose you are having a rental income, and you are allowed to deduct some of the expenses during the year, right? Now, if you're allowed to deduct some expenses, you're even allowed to deduct the depreciation, that is capital cost allowances. But suppose your property income or your rental income is now zero, because you have income, and after that you have your net rental income. Okay, after you have deducted some expenses, it comes to zero. You're not allowed to reduce You're not allowed to create the depreciation to create the loss in the property income. So that is the difference. We'll be learning this point in the next chapter when we are going to talk about the property income. So property income derived from rental property is subject to separate rules. Capital cost allowances claimed against rental property may not create or increase the loss for rental properties. So you are not allowed to create extra loss, because if you are aware, losses are always good, right? Sometimes, because if you have losses, you can carry forward it and you can reduce here. You are not allowed to create the losses, and that's the difference between income from property and income from business. You remember, if you did initially, we did some problem where you had business losses, so you are allowed to carry forward the business loss and you are allowed to deduct it from the income in the next year, but here you are not allowed to do that. So that's the difference between business versus property. Now there are many other differences, however it's an individual's responsibility and case to case basis to identify whether you are earning an income from business or income from property. Okay. Next one is inclusion in business income. Now, when you are earning the income, when you are doing the business, okay, and second. Now we are doing the business, okay, and you have to report it on an accrual basis. So even if it is an accrual basis, whatever income you have received it, like receivable, whatever services you are provided, but you have not received the money. So whatever money you are supposed to receive it, or you have received in advance. That is because you have not provided the services, but you have received in advance, because it's an accrual basis method. So if you have received the income, like say for example, prepaid rent, but you have not provided the services, or else suppose you sold the goods on credit but you have not received the money for it, in that both case you have to include in the business income as a part of your income, because they are the part of your income, and because it establishes the accrual rule basis. And that's something which is, if it's a cash method, it's straightforward, but it's accrual method, you have to include that all amount which you are meant to receive it or which you receive in advance, and then you provide the services. So you enter it in the year in which you have received it. Like receivable is when you sold the goods. You have received the amount, but you have not provided the services. So you have to enter in the year in which you are meant to provide the services. So there shall be, in computing the income of taxpayer for a taxation year as income from business or property, such of the following amounts are applicable. I'm talking as per section 12 of 1, okay? Subsection 1. Services to be rendered. I'm talking about amount received. Any amount received by the taxpayer in the year in the course of business that is on account of service not rendered or goods not delivered. I'm talking about this amount received but not before the end of the year for any reason, may be regarded as not be having been earned in the year or previous year. So you have to include it. It's not earned because you have not provided the services. It's considered service is not yet rendered. So act would include the amount received such as prepaid, rent, payment of warranty, or merchandise and container deposit. Amount receivable is something under accrual method. A taxpayer carrying a business must include the amount receivable in the year, even if they are not received it in the year. In general, amount is receivable where the taxpayer has an unconditional right to the amount in the year, even though this is not due until the future year. Even the money you are supposed to receive in the next year, but you have already provided the services. And it's your right. You haven't done anything so that you are not supposed to receive. You have done all your duty. You have performed your duty. And in that case, you are meant to receive the amount of, you're meant to include the amount of receivable. Now, guys, when we are going to talk about amount receivable, be mindful about it that when you talk about the amount receivable, you have to include that amount in the year you have given the service. Okay, even if you receive the money next year. So, suppose for example, if it is December, okay, and suppose it's December, and you have sold some goods, okay, and you are not meant to receive any money until January or February. So in that case, you have to include that amount in the December year end, because you have provided the service in that year. So there will be something called as bad debts, and there is something called as doubtful debts. Okay. We are going to discuss about it when we are going to go further. But just be mindful that I'm going to talk about bad debts and outflow. This is very good and this is very important part because this constitute of income. Amount receivable is a part of the income because you have provided the services, but you have not received the goods, and this give rise to account receivable. Sorry. Remember, we did it in our accounting, accounts receivable or bet. And if you are selling goods on credit, just remember you give rise to accounts receivable because nobody is paid you cash. You will receive it in future. Okay, I'm going to talk about this again when we are coming back. I'm going to refer to it. But this is a part of the income which you are going to include in the business income. Now there are other inclusions, guys. Covered is lottery winning, miscellaneous receipts, and income from the crime. So crowdfunding. What is crowdfunding, guys? Just do some research. Be active and do some research now. I want you guys to let me know what's crowdfunding, guys. Because these are also included. Yeah, I'm waiting for you to let me know what crowdfunding is. And speak up, guys, rather than just writing it.
Crowdfunding is the practice of funding a project or venture by raising small amounts of money from a large number of people, typically via the internet.
Very good, very good. Thanks, Eleanor. So it's basically crowdfunding is basically a method or a model where you raise the fund in a smaller
Oh.
amount from the crowd, right? And
Yeah,
it's via
Oh, is it
Crowdfunding.
GoFunding? Something like that? GoFunding?
Or a small
From
amount of capital from a large number of individuals to finance a new business venture.
very good, very good. Yes, yes.
Crowdfunding is a way of people, business, and charities to raise money. It works through individual organizations who invest in crowdfunding projects in return of potential profit or reward. Investing
Yes.
is the way it can be risky, so make sure you know what to do with it.
Very good. Yes, thanks. What else, guys?
Makes use easy
Thanks
accessible.
for adding Jessia. Yeah. So okay. So Vani wrote it on my behalf. Thanks for adding Jessia, sir. Even though you are not making or zero income, it was subjected to declare and file. Even though you're not making or zero, yes. If you are doing a self-employed business, you are meant to declare money. Doesn't matter unless and until you stop doing the business, unless you've sold the business. Not making or zero income. Yes, even if it's a losses, you have to file it at least, right? Because you have to put it in the. Okay, guys. Crowdfunding. Crowdfunding is something which, when we talk about it, everybody shared, like a couple of students or more than that, have shared their experience about it. That if you are raising money via internet into small amount from people starting up a new business or a venture, okay, that's called a crowdfunding. Now we got to know what crowdfunding is. Do you think it's taxable? It says taxable if non-equity in nature. Okay. So what is crowdfunding basically according to, as per, I would like to just add up to you guys because you guys have already spoken up about it. So as the name suggests, crowdfunding is a manner of raising funds from a large number of people, as mentioned by all of you. Recently, websites such as Kickstarter, Kiva, they're all having been drawing the attention. So if you like to go ahead, go to Kickstarter website and it will show you. It has actually created that business by raising the fund through crowdfunding. So it's basically focusing on the creativity part of the business. Depending on the crowdfunding model, the money that you raise from a crowdfunding campaign could be an income, could be a gift, could be a loan, or a capital contribution. So when you raise the fund via internet, it's not that you don't have to pay anything. It can be any form as you have the arrangement with the people. So suppose if you're raising fund through crowdfunding and you say that, oh, it is a gift. Okay, you know what? I will take it as a gift, and in return, I might give you some kind of reward. Okay, in terms of giving you some kind of souvenir. Like I am doing a business, a creative business. I will give a T-shirt of that creative business. Or guys, there's some music going at the background. Can you Can you stop doing that or I have to mute everyone? I don't know who's insensitive to that. I'll need to find it up. I can find it up. Wait.
Maybe Ate Janet.
Give me a second, okay?